Meantime, Pfizer closing at the top of the S&P 500 today after releasing its 2025 outlook, which was in line with expectations. The company saying it expects 2025 sales of its COVID-19 vaccine and drug to be consistent with 2024 levels. And joining us now is BMO Capital Markets analyst Evan David Siegerman. Evan, good to see you. So is this reaction relief that they're basically on track and have costs under control?
Well.
Yeah.
A lot going on here. So, yeah, for sure. So we were very encouraged by the earnings guide of $2.80 to about $3 per share. At the midpoint, a little above. The midpoint of that is a little above where consensus was. So the key here is folks were concerned that they were going to sandbag guidance like they did last year. They didn't. It shows that they're getting costs under control and that revenues are also supporting some growth. I think there's still room for next year for them to beat and raise, which investors like as well.
How do you factor in patent risk?
For sure. So a few things. I think, Eliquis goes off patent in 27. Ibrance follows as well. That's there. That's why they acquired Seagen last year. On the call, Albert Bourla was talking about how Seagen could be $10+ billion of revenue, additional by the end of the decade. You still have a decent amount from COVID, and they're also launching some other assets, including a drug for multiple myeloma. So they have good assets in development and being launched. There's going to be some patents, the drug patents that roll over, but they are making really nice progress.
Evan, what is Trump 2.0, RFK Jr., sort of this materializing administration that's coming into power come January going to mean for healthcare, especially with all the focus on PBMs, all the focus on drug pricing, focus on vaccines?
So, yeah, most definitely. So Albert also indicated that he met with President-elect Trump and I believe RFK recently in Mar-a-Lago. A few key takeaways there. One, they worked very well together in Operation Warp Speed, so he has a good relationship. I think RFK is a skeptic on vaccines, but again, HHS is a very complicated organization. I don't see him disrupting the vaccine the vaccine space that we have currently. I'd also want to add, there's going to be new focus on PBMs. That was something that President-elect Trump said the other day. Albert Bourla reiterated that. And I could see that pressuring the PBMs. We saw that in the market today, which could be good for some of the biopharma names, taking the drug pricing spotlight off of names like Pfizer, for example.
The fact that it would take the drug pricing spotlight off of the Pfizers of the world, would it actually put pressure on them, though, in terms of prices? Or does perhaps cutting out or re-regulating the middleman actually mean that they're going to make more money in the process?
Well, one thing that would happen is we wouldn't see these list price increases, which these companies get skewered for, and there'd be more transparent pricing and potentially more transparency for the patient at the pharmacy counter. Right? There's a lot of talk around high out-of-pocket costs driven by the PBMs. So if you see, rebates and discounts actually going to the patients, that could be good for someone like Pfizer. Of course, it is always going to be more complicated. And I'm sure, there's always going to be folks complaining about the high cost of drugs, but getting some more transparency won't hurt at all.